Good afternoon. You're watching Businessworld Live. I'm Jes Delos Santos. We kick off our broadcast this afternoon with the Philippines finally exiting a pandemic induced recession after posting gains in the second quarter. The domestic economy grew 11.8% in the second quarter after four straight quarters of contraction, with the worst one recorded in April to June 2020 at the height of strict COVID 19 lockdowns. The second quarter GDP print is the highest since the 12% growth in 1988. However, economists have repeatedly pointed out that the double digit figure isn't entirely a point for celebration just yet, with growth coming from a low base. National statistician Dennis Mapa says the reimposed ECQ this month and the potential threat of the Delta variant pose downside risks that may drag GDP back to negative territory this third quarter. Quarter on quarter, the GDP shrank by 1.3% in the April to June period on the back of heightened mobility curve. But Economic Planning Secretary Carl Kendrick Chua and other economic managers insist reverting to stricter lockdowns is a proactive move on the government's part.
The longer the quarantine or the ECQ lasts, of course, the more impact or risk to growth for the entire year. We are not only concerned about growth at a particular quarter or month or an instantaneous period. We are concerned about the entire year. So we are looking at this ECQ as an investment, as a proactive measure to prevent a worse outcome.
The economic team also wants to accelerate vaccination as part of the recovery program. So far, more than 11 million Filipinos have completed their vaccine doses against COVID 19. Over 24 million doses have been administered since the start of the vaccine rollout last March. Just when you thought that figure should at least cheer on investors, well, it did not. Shares today started off on a good note, but pared back those gains to end the day lower by 0.1% to 6,623. This as data showed once again that quarter on quarter, the economy still contracted at a negative 1.3%, a reversal from that 0.7% growth back in the first 3 months of the year. Most economists were expecting a quarterly contraction of 1.1%. Shares sank as much as a half a percent to 6,599, as you can see right here, but temper those losses right before close. A quick look at our leaders and laggards. You have DMCI at least leading the pack here, rising 4.1% after reporting that profit in the April to June period shoot up to 5.2 billion pesos from 1.4 billion pesos the year prior. A couple of Gokongwei stocks also in the green here. You have URC, Robinson's Land, and Robinson's Retail. Globe also in the positive territory after raising capex for the year to 76 billion pesos. On the flip side, however, Bloomberry here is the day's worst performer, slumping by 3.3%. And while we're still in the thick of earnings season here, might as well take a look at one here, particularly Metro Retail Stores. Not a good quarter for the retailer this time around, still unable to get out of its hole. Mrs. G remains at a net loss of 55.4 million pesos for the second quarter. That brings first half net loss to 181.9 million pesos, already way beyond its 84.7 million peso net loss in 2020. Revenue, however, still saw a 2.7% increase in the second quarter to 6.9 billion pesos. Food retail saw an 11.3% contraction, while general merchandise declined by 1.7%. Same store sales also dipped by 13.9% over a 6-month period. Despite that, Mrs. G says it's still on an omni-channel strategy as it strengthens both its online and offline platforms. It also plans to open more stores this year as it eyes recovery, especially in the Visayas. The retailer, however, as you can see right here, declined in today's session, slumping by 2.4% to 1.24 1 peso and 24 centavos a piece. Okay, this time we circle back to our top story for the day with the economy returning to growth in the second quarter, at least on a year-on-year basis here, quarter and quarter, though GDP fell back into contraction. How's that going to affect full-year growth, especially with NCR's return to ECQ? Time to pick the brains of ING Bank Manila Chief Economist Nicky Mapa. Good afternoon, Sir Nicky.
Hi, Jester. Thanks for having me over.
Okay, first, year-on-year figure, that's a growth of 11.8%, the fastest rate yet since 1988. But that's, of course, coming from a low base effects last year. Your forecast was at 10.9%. Was this a surprise for you? And what do you think pushed that higher reading?
Yeah, well, I think the number we should be focusing on is that negative 1.3% quarter over quarter contraction. It was actually worse than expected. Market was only looking at a negative 1.1%. Yeah, possibly just some movement in the base because of the revision to the first quarter GDP number, but
Mhm.
it's still a disappointing outtake for the second quarter GDP. Yeah, you're up by 11.8%, but you contracted by 17% last year, so still a lot of ground to cover for the economy.
What do you think at least led to that contraction? I mean, a lot of analysts have said, it's really primarily due to Metro Manila's return to stricter lockdowns, at least during the April to May period.
Yeah, well, the impact of those lockdowns are up front and center. We see it in the PMI numbers reverting to contraction in April and in May. And now that we're back in lockdown here in August, we're likely to see a reversal of the positive trend in PMI we've had for the past 2 months. So these lockdowns do hurt the economy. But on top of that, we're seeing a lot more strains in the economy with regard to our fundamentals. You're seeing unemployment still quite elevated at 7.7%, despite sort of looser restrictions. So there is some pain that the economy is feeling, with or without the lockdowns. But the lockdowns do hurt. But I think on the whole, the economy is just not moving the way it used to be prior to COVID-19.
Okay, good thing that you pointed that out, since that's precisely where we're at right now. I mean, Metro Manila back to ECQ, at least for the next 2 weeks until August 20. There's still a likelihood, of course, that we might actually not return to GCQ anytime soon, even after that. What does that say then to how our performance will be in the third quarter and the remainder of the year?
Yeah, we're penciling on a negative Q and Q in the third quarter as well. Of course, just this all depends on how long this current GCQ lasts. Just taking a page of what happened in the rest of our ASEAN neighbors, Indonesia is currently in the fifth week of its lockdown. So, the Delta variant wave could last quite long. And this might force us to stay in ECQ a little longer. And this, of course, has your impact or negative impact on your GDP. So, with possibly 2 straight quarters of negative Q on Q GDP, this is going to be a tall order for us to hit that 6 to 7% growth forecast or growth target that the government has set for us this year.
Are you at least over at ING already revisiting your targets or your projections for the year?
Well, definitely. We had previously done a revision to our growth outlook to 4.7%, but with this current ECQ that we're in, we're going to have to retool that and push that likely lower, based on this current ECQ and possible extension of the ECQ for more than 2 weeks.
Now, also back in the second quarter, adjustments were made to the lockdowns in Metro Manila and the NCR Plus area to somehow offset potential losses. And Secretary Chu has alluded to that earlier, saying contraction could have been worse. Should we do the same this time around?
Sorry, do you mean
Uh,
relax some of the
uh,
restrictions?
yes, at least make a bit of adjustments here when it comes to how lockdowns are being imposed.
Well, I mean, I think this is just a public sector challenge that we're faced here with the Delta variant. So, yes, maybe you do cut corners with regard to restrictions, and maybe that delivers you some of that growth, but that might just extend the need to stay in lockdown a bit longer. So, personally, I'd like to see these lockdowns really run their course and get the virus spread under control before we start to relax some of those restrictions. You might be, taking one step forward, 2 steps back all the time, and that's definitely going to derail growth if we have to extend these lockdowns further.
Now, of course, you have the government also starting to at least hand out cash aid, especially for Metro Manila residents. That's expected to start tomorrow. An ayuda of 4,000 pesos at least per household. Is that enough to somehow at least bolster spending during the period?
This is something that we would hope the government would bring out sooner. If you look at the 2Q GDP on a sectoral basis, government spending is the only sector that posted a contraction. So definitely lacking some of that fiscal punch. And hopefully the third quarter number can be positive. The ongoing ayuda or the ayuda that will be distributed tomorrow or on Wednesday will definitely help at least support some of these families that have to lose employment during this lockdown. So hopefully that continues to help support the livelihood here during the lockdowns.
Okay, now, Sir Nicky, central bank is set to meet Thursday. What should we expect? Is more easing warranted after those second quarter figures?
Well, I think the BSP's run out of rate cuts for now. But it does sound like the BSP governor wants to retain his accommodative monetary stance. So he's likely to keep policy rates at 2% for the balance of this year and maybe well into next year, pledging to keep support for as long as the economy is in recovery phase. There was some chatter about a triple R reduction, but I think he shot that down yesterday. So no surprises from the BSP on Thursday, and possibly no changes from the BSP for the rest of the year.
Okay, now with the rate things are going, how long before we revert back to pre-pandemic growth?
Previously, we had expected the Philippines to return to 2019 levels of GDP by the end of next year. However, with this current surge or wave that we're facing and a possible slowdown in Q1Q growth in the third quarter, we might even see that slip back to the first quarter of 2023. Something that Secretary Dominguez has also noted that we might see the return to 2019 growth levels all the way, not just next year, but the year after that.
Okay, quite a long way to go if that at least is realized. Thank you very much for your time this afternoon. ING Bank Manila Chief Economist Nicky Mapa.
Take care, stay safe. Bye.
Now, here's another story. We're keeping our eyes on prospects for Signal are off to a good start. The media and telecommunications firm under the Pangilinan-led MediaQuest Holdings is seeing increased subscriber base push profits up. MVP Group of Companies Chairman Manny Pangilinan tells the chiefs that first half net income is at 510 million pesos, up from just 72 million pesos in the same period last year. Pangilinan says it's looking good from here on.
Start with Signal. They have done magnificent. And Signal is in danger of hitting 1 billion profit for the year. I think that puts Signal in a position to help TV5 without much help from PLDT.
And those are the biggest stories this trading day, August 10, 2021. Catch Businessworld live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.